do. Now, we all go ahead um, and sit there and have to reflect. We need to look no further than the book that I referred all of you to last week, which was Victor Niederhoffer's book, The Education of a Speculator. Okay, and as we heard, Victor had $100 million plus accounts. All right, and basically went ahead and blew them up overnight because of bad trading decisions. Okay, and so again, the book is by Victor Niederhoffer, and it's called The Education of a Speculator. So the bottom line is you can go ahead and have lots and lots of money, and all that means is if you make stupid mistakes or junior trader mistakes, you're just going to lose lots more money. Okay, many of you recall, last year we had about 3 students that joined in, each of which had lost over 6-digit figures apiece last year. You remember that? They lost 6-digit figures apiece, going ahead and doing what? Counter trend trading the rally to the upside. Okay, these guys had big accounts, lots of money, and what did they do? They kept counter-trend trading the rally, counter-trend trading the rally, counter-trend trading the rally. They started shorting stocks, ETFs, futures contracts, anything that they could afford, and throwing money in, and it ended up badly for all 3 of them. Okay, the point is their 6-digit losses are bigger than a lot of your accounts. And so a lot of people sit there and say, well, if I had a big account, I could have gone ahead and made money. Well, I'm here to tell you firsthand that is a very unintelligent, uninformed statement. Because, as I said, go read Victor Niederhoffer's book and find out how fast you can lose $100 million. Yes, hindsight is a wonderful thing, Mel. Exactly. And so that's really important for people to understand. Like I said, at least there's a book about it that at least, some of you can go ahead and pull out. You don't even have to read the book. If you just go to Wikipedia, you can read Victor's bio. Okay. Well, and Tim, we're going to talk about that because that happened to Lance. Lance says, I think when traders have larger accounts, they get sloppy with their trades. That happened actually to Lance a little bit here, and we'll talk about that at one point. And so the point is that just because you have a big account doesn't mean you're going to make big money all the time. Okay, I still have to, with my account, go ahead and say it's my way or the highway. You still hear me say that. Just because I can put, a lot of contracts on doesn't mean I should. That's one of those learning curves that each of you will go through as you try to migrate from conservative trades to conservative aggressive trades. You taste that blood for the first time. How many of you here have reported to me, because I've seen it just in the last 4 weeks, that either you've had your best week ever in the last month, or you've never experienced, like you have since being here with me, where you've had so many wins in a row? How many of you here have gone ahead and said that to me? Because I see it like every week. Somebody's saying, I've had my best day ever, I've had my best week ever, my best month ever, the maximum number of trades in a streak. Yep, the names are flying in there. So well, thank you. And by the way, Tony K, good morning. Did get to see you earlier there as well. And Scott, I think you joined in a little bit later, so good morning to you as well. And Carrie, JJ. So the bottom line is lots of names in there saying the same thing. Okay. And that's right, Ed. Exactly. You too. So I know you were really excited. So the point being, and that's just in the last month, and of course in the the last several months, I hear it all the time. I've never seen so many wins in a row, and they weren't talking about me. They were talking about their own accounts. Okay, the point being there is what happens then is you run the risk of getting so many. Your confidence grows ahead of your skill level and account size, and then people want to jump to this. Okay. Am I clear about that? Does everybody understand that? That is the risk that every one of you is going to challenge, is going to face in your growth with me, because what's going to happen is you're going to go ahead and get that Superman or Wonder Woman complex where it's like, wow, this is it. I finally get it. Wow, look at this. You know, I used to win one, lose one, win one, lose one, win one, lose five. And now I'm consistently going to make money. That's it. I've cracked it. Rob's helped me see the light. It's done. It's over. Right, Lance? I mean, you get that point. You get that euphoria where, okay, nothing can stop me. I'm bulletproof. And then you want to jump in there and make money on all these things. And so then all of a sudden you eventually have to have the reality check that your skill level or your account size, and you eloquently went ahead and said that here. And this, by the way, again, I want to emphasize, these were Lance's answers, not what I told him to put. And he says, taking very aggressive trades and even conservative aggressive trades that he was not ready for with his knowledge level or account size. Every one of you will likely go through. I'd be really shocked. Only the most conservative amongst you won't necessarily go through this phase, and then you'll have other learning phases and challenges, I'm sure. So did this make sense to everybody? The risk is having too much success too quickly and going ahead and not taking the time to understand those trades better before, because after having the success in the conservative trades, that you'll go ahead and want to immediately start jumping up to the next level to make more and more profits. Okay, because obviously there's less conservative trades than there is conservative, aggressive, and very aggressive trades. When you add in the conservative, aggressive, and very aggressive trades, basically, bottom line is, there's going to be that learning curve. So I really wanted to spend a lot of time on this particular comment, okay, because during the trading day we can't focus so much on it, but that's what today's about. Today's not, we had great trading again on Friday. I've had a great day, week, month, year, throughout this past year here. So, hey, today we're going to focus on the things that we need to think about to drive us to a new success level. These are also things, as you're trying to develop a risk trading plan, then that you should be keeping in mind, okay? So,
hey, Rob, also I'd like to add,
yeah.
It's, I mean, when you're trading in any of the trades you take, conservative, aggressive, and very aggressive trades, I mean, you make it look so easy because, it's like you just have, you know exactly where to place your entries. But the one time that doesn't work and in a conservative, aggressive, or aggressive trade, it gets ugly really quick.
Exactly.
And most of the time your trades work so fast, and it's like you want to do them because it's like they're going to work. But the one time it doesn't go, and when you start add contracts in, 10 contracts or whatever, at that point it takes a lot of contracts to get that cost basis to where you need it to be to get out of that trade. And then
exactly. And so the lure is most of them work so fast. But
right.
As everybody here, and including yourself, as you know, Lance, always hears me say, look, gang, I'm not trying to win the battle. I'm trying to win the war, and I don't want to lose even one big battle. So I'm much more conservative on those trades. I always make sure, Lance, I have that backup plan, because inherently, the more minutes, the more hours you're in the market, the more of the likelihood of a big event happening. Kind of like back in May, of course, the flash crash, for instance, or of course, how many times have we seen in the last couple months currency announcements, devaluations in currencies? We've seen the news announcements about the bond ratings, the debt ratings going down in different countries, and we've had these wonderful spikes that gave us great trading opportunities. But the point being is, what happens if you're in before that news announcement comes out, and then it starts moving against you? So it's so important to have the backup plans if you're going to stay in the trade, or a real tight stop management protocol if you can't. And now the good news is today, gang, one thing we're going to be doing, we're going to be going through a scaling calculator today and just giving you some ideas and some examples of things to help you understand scaling. Because, Lance, I think you'd agree, one thing people don't go ahead and understand is scaling. They don't go ahead and um, they don't understand. They don't even know how to put scaling in. And so I've tried to show some examples where people go ahead and I'll see people if they've got 10 contracts, they'll put like 6 in to start their trade, and then it goes down. They'll put in like another 3 here, and then all of a sudden it goes down to here. They got 1. Well, guess what? That's completely the opposite of how it should be, isn't it?
Yeah.
Because really, I mean, from my perspective, from Rob Hoffman's perspective, because if you put all your bullets in early, hoping for the big win, you've got no backup down below. We're going to take a look at this, gang, at this whole scaling concept, some ideas for you as we get into this a little later in the presentation. I'm actually going to pull up a scaling calculator, and we're going to go through it. And Lance, when you first started with me, you only traded a handful of contracts. Is that right? You were basically a very small contract trader. Is that right?
Yeah, I started with a very minimum account to where it was, and just started with 1 contract to trade.
That's right. And now you've gone ahead and worked your way up to the ability to trade 30, 40 plus contracts over the course of the last 9 months. Is that correct?
Yes.
Okay. So to give you some perspective there, Paul, to answer your question. Okay. So, and yes, I agree very much. So you were trading what, 2 contracts, 3 contracts, 4 contract type trades early on there back in January? You remember approximately where you were at there?
Oh yeah, I mean it was 1 to I think the max I could trade was, I'm wanting to say it was like 5 or 6 contracts.
Yeah. Okay. So there you go. All right, and so now being up there nicely to 40 plus there is great stuff, and nice work. And so the so let's go ahead and keep going here. I hope that I spent a lot. We're going to talk more about scaling, of course, later, as you saw. But I hope that this goes ahead and really resonates with people, because this here, what mistakes did you learn most from? I can't emphasize that enough. I always try, but as you know, Lance, you said it's like a drug. You see me making money, and I make it look easy, but that's because I've been doing this for many years. I'm very good at what I do, which is why everybody should be here. They shouldn't be here to be like a trained monkey. As you know, Lance, I'm very against that. They shouldn't be here like trained monkeys just taking trades I take. They should be learning from me. What an opportunity each and every one of you has here to go ahead and learn from one of the few people that can actually do it. One of the few people who can trade live, makes money, and is willing to teach. Not these traders who can't trade their way out of a box, so they open up these simulator trader education rooms and have their little hypothetical result statements buried deep within their websites so that they've met government requirements but can't trade their way out of a box. And so you end up going and seeing loss after loss, or they'll win one, lose one, and they tell you all these things about, oh yeah, 50% losses is okay, etc. Okay, I'm one of the few people who can actually do it and has done it here right there live on the screen. You guys have a huge opportunity to learn, but if you're going to sit here like a trained monkey, and this is to the new people, obviously, those of you that have been with me, I'm preaching to the choir because you guys know this, but for those of you that are brand new, I don't like trained monkeys. I want people to grow with me here, because we've had a lot of students who just in the last couple months, like with the Japanese yen, messaging me, calling me at night, like when the Japanese yen was dropping and giving me as one of my setups. I came back to the room, and between the 2 different nights over the course of that week where the Japanese yen had those trades, I made about $3,800, $3,900 there between those 2 nights right there in front of you guys, because you guys called me back to the screen and said, Rob, I got one of your setups here. Okay. Yeah, exactly, Chris. It was great. So for the people that were logged in, but that was because you guys were learning and growing and then contributing back. That's what I want everybody to do. So, and part of that, not going and just jumping after, chasing after conservative, aggressive, and very aggressive trades. And frankly, not jumping after conservative. Make sure you understand what you're trading, and why you're trading it, and does it meet your knowledge level and account size. And we're going to be able to show some examples of account size here a little bit later as we show scaling stuff. Okay. And so, Phil, I'm not sure what the last part of that a question means. What was his accountant? I don't know if you mean account at, but like I said, we're going to go ahead and be very. I mean, it's a little bit personal to say, okay, my account was whatever 2,000, 3,000, 4,000, but he was basically the maximum number of contracts he was able to trade was 5 contracts, I believe it was 5 or 4, whatever he said. Now he's able to trade many times that, about 8 times that plus. So he's really earned the right over the last 9 months to grow. I mean, he has grown. He's learned a lot here, and he's made some pretty silly mistakes during that growth, and we're going to talk about those because he and I both laugh at them now. Not so funny, though, as he was growing his account and starting to make a new level of mistakes, because initially you have the small contract mistakes, then you're going to have the big contract mistakes. Okay, and Lance is finding his growth. Let me just give a quick example. Lance had a small account there where he could only trade a handful of contracts. He started growing and growing and growing. And he went ahead then, and eventually he forgot that he had set a manual stop loss in, because with Infinity it's automatically 60% of your account. Lance actually said, nope, that's too much. I want to go ahead and have a finite level. Here's the level that I want. Well, the problem was, as he kept growing and growing and growing in his contract size, he went ahead and found himself forgetting, because it's very easy if you think about it, gang. There's no daily announcement. There's no daily announcement that says, hey, here's your daily stop loss limit. And so what happened was he forgot about that. So he did a large trade one time, okay, a larger trade. So it moved a few ticks against him, and ended up stopping him out with that small stop loss that he had, because he forgot he had that. He raised his contract size up nicely, but he forgot about going ahead and raising the manual stop loss. So a few ticks against him, it blew him right out of the trade. Guess what? One tick later, it turned right back around and went right back down. Is that right, Lance? That's what that you talked to me about. So the key was that you forgot about your manual stop as you were growing this bigger and bigger account to trade with. You forgot that at one point in the future, you had gone ahead and made this agreement with the broker for a smaller risk loss, and never upped that risk loss as your account size grew, and that it was a sore learning lesson for you as it turned right back around one tick after you got blown out. And then one of those situations that happened to you?
Yeah, it was just immediately after I got blown out. It was a guaranteed trade to work, and you don't really realize when you have a larger number of contracts what little dollar amount $4,000 or $5,000 is. I mean, it's just not very much as far as any ticks that go against you. It's really quick.
Exactly. And so basically, what I'm saying here is, gang, that, okay, we have the small contract learning curves that are going to have to be gone through. And then as you grow your account, there's going to be a new set of things that you're going to have to worry about. That is one of them. Like I said, forgetting about agreements you've made with your broker to keep your stop losses really small. But if you're trading a bigger account, how quickly you can then go ahead and be blown out in a situation like that. So point being is that there will be new learning curves along that journey. If anybody thinks they're going to be super trader from start to finish in one day, in my opinion, you're sorely mistaken. However, give me a second here. Sorry, had to get a little sneeze in there. However, though, if you go ahead and we can see from Lance that he went ahead and was able to grow. Yeah, there you go. Exactly, Steve. Maybe 2 days. Maybe in 2 days you can be super trader. Okay. bottom line is, I didn't have a Rob Hoffman to help me, so it took me years. Now Lance has seen the growth, he's seen the development himself, he's seen his account go ahead and really grow. I think we're going to get to that a little bit on some of the slides, or another slide. But he's watched his account grow, and that's because he's been learning, he's been working through, he understood quickly before he did something too silly about the aggressive trades and the conservative trades. He quickly fell in line and understood, okay, you know what? I need to learn more about these things before I trade in them. And I think that's a key to success. Okay? Now, with that said, let's go ahead and move on to the next set of questions here. Okay. Let's see. The next set of questions here. Do you have a business license and tax benefits from it? Lance, if you just want to address it, you operate under sole proprietorship, but you will be looking to other tax advantages in the future. You just want to explain that just briefly?
Yeah, I mean, I've always owned my own business. So, I mean, I've always operated under sole proprietor license, and I'm real familiar with that type of situation. So that's just what I've continued to work under. But now that I'm consistently profitable now as far as in trading, I'll be looking at different things at this point.
Okay, and by the way, there was a question. I apologize. Again, the question's kind of flying by there. I'm trying to catch a couple of the questions. Like I said, we've got this kind of format. We haven't even got through general background. We got a lot more to go, and that's why I said I knew this was going to kind of happen. That we were going to have a lot to talk about today. But I did want to go ahead and ask one question. Lance, did you have a strong technical analysis background when you started? Did you read books, understand technical analysis? I understand you really started out 13 years ago with Elliott Wave, which is pretty technical, and fundamental analysis, which is, of course, not technical. But how would you rate your technical analysis ability before you started putting money to work? Like, for instance, in my case, of course, I was a teenager. And I actually started hand-drawing charts and everything for years before I ever put my first dime into the actual stock market, because I didn't have the money and I was a teenager. So I had kind of developed a technical aptitude at a entry-level perspective before I went ahead and actually started in the market. How was your technical analysis background? When did your technical analysis background really kind of jump in knowledge level? So how would you rate yourself as far as where you started and where you're at today?
Well, I mean, I always did a lot of reading as far as on technical analysis. I mean, I'm real familiar with the MACD, RSI, stochastics, volume. I mean, it's but really, I always looked at it in the general tense of what everybody used it for, and once I've seen the ways that you use it, I mean it's just opposite. I mean, so I mean, as far as my knowledge level now, I mean, you just use things completely different than what you were trained to think of it to start with.
Okay, Colette, does that help answer your question a little bit? If you have any other follow-up, let me know on that one. And the so as far as, let's go to the next one here then, as far as questions. What is kind of your daily pre-trading routine? You want to talk about that for a few minutes?
Sure. I usually get up about 6 in the morning, and look at the markets and see what's kind of setting up. And then I'll look at it, and then I usually eat breakfast and get kind of ready and kind of get back in here about 6:30, 6:45, and then just I'll usually sit down and usually stop about 11 a.m. Then a lot of times I'll come back, if I'm around at 1 p.m. and kind of look at the markets and see what's going on. And then also, in the evening when I'm kind of here at the house, I mean, I'll always kind of pay attention if there's news events that are kind of coming out in the evening, and kind of look at what's going on and just see what's happening. But I mean, usually, I mean, for now, I mean, the mornings have at this point seem to always work the best. I mean, as far as just trading the mornings only now.
Yeah, and of course, from my perspective as well, occasionally in the afternoons, you probably see the same thing. You may find a trade here or there, but for the few times that you do, compared to all the times you run the risk of trading out of boredom, you go ahead and you found that the mornings really work best. And these are central times. Lance is in Texas, gang, um, and so just to keep those times for central time. So basically, Lance, he really focuses his primary trading, um, between 6 o'clock and 11 o'clock, and then he'll come back if he's around to just kind of see what's happening at the 1 o'clock, and I do the same thing, but what I find is very seldom do I end up getting those trades in the afternoon. I'll take some here or there, but the risk is, of course, trading out of boredom. If you actually sit there religiously and sit there each day for those last couple hours, at least for me personally, I go batty. And Lance, I don't know if you find the same thing, because sometimes, especially like in the currencies, watching paint dry, and then the S&P with the high frequency trading, in the afternoons, the 1 or 2 times a month you get those raging moves compared to the other 17, 18 days a month where it's like watching paint dry or higher risk. I imagine you don't find a whole lot in that afternoon versus the mornings.
No, and that's for the main part. I hardly ever even, I mean, it's most of the time I usually am out of the house at 12 and doing something else by that time. So, I mean, it's not something I pay much attention to in the afternoon.
Okay, and you now during your growth journey though, um, did you go ahead? Did you focus on that time frame, the 1 o'clock to 3 o'clock, and then you came to realize that that time wasn't for you, or did you always just focus on the mornings?
Oh no, I sat in front of my computer 24 hours a day when I first started. I mean, it was, you're just sitting there just waiting for something to happen, and it'll get you in trouble too because you want to trade.
Yep. Oh, exactly. Exactly. Okay. Very good. Yeah. Again, this question keeps coming up. I apologize. Lance is in Texas. This is Central Time Zone. Okay. So basically the same as what I'm using here, except that I don't. I said I'll look at the market after if I'm here between 1 o'clock and 3 o'clock. I'll look at it at a very cursory view. But I will not go ahead and actually sit there and wait. Okay. Um, and Pete, yes, Lance is a great guy, and so that's why I figured it'd be great for you guys to hear it. And he's doing what a lot of people want to do. They want to go ahead and work on growing their accounts. They want to figure out, the problem is, okay, here's the problem. I've been doing this for many, many years, and people draw the assumption, well, Rob, you're at this super level. You've lost touch with like what it's like to be a small contract trader. Nothing could be further from the truth. I work with small, contract traders all the time. Okay, small lot traders, if for the stock gang, and I have never lost touch with that because I've always, all these years, dealt with somebody. So I've never lost that perspective. Make no mistake about it. And as I said, we need look no further than Victor Niederhofer. I could rattle off a lot of names, but we need to look no further than Victor Niederhofer. You can blow up $100 million literally overnight. Okay? So just because you have built your account up doesn't mean you ever get the opportunity to just sit and let your guard down. And that's why you get to watch me over and over and over again talk about these things and focus on them because they're so important. Everything I say, I'm saying this and we're doing this presentation for a reason. There's a lot to learn and grow from. Lance, can you tell me when you were a one contract trader or 1 and 2 contract trader, something along those lines, which setup did you find to be your most favorite? Because obviously I know you're trading now more of my setups, but before, what setup was it that you think maybe attributed to going ahead and because it's going to kind of tie into this, and maybe this will be your answer. I'm not sure, but and so maybe what we should do is actually take this question first, and then see if you can expound on that. So what concept has contributed most to your trading turnaround? Let's take that first and talk about your answer a little bit more here, and then we'll go ahead and I want to give you that second part of that question.